Well, good morning, everybody, and welcome to the Locke and Your Success Trading Market Update for April 7th, 2014. Before we get going, we'd like to remind you that we're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, the material is for educational purposes only, and please note that we do use hypothetical computer-simulated results. And although they are believed to be as accurately represented as possible, there may be differences in live trading. Also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And come on over to our website if you're watching this on YouTube or some other outlet, and check out our programs, M3 Bearish Butterfly ROCK, Group Coaching, and Trading Triangle programs. And join our mailing list to get the free report to 7 Secrets to Becoming a Successful Trader, and sign up for our weekly webinar. All right, let's take a look at the markets and what's going on. Well, last week in our report, we were kind of talking about the fact I was thinking the Russell was going to go into a sideways range, and a fairly wide sideways range between 12.15 and about 11.40. And early in the week, we got a fairly significant bounce, and that quickly reversed, and we're right back down to 11.53 again. So no really big surprises there, and things are more or less acting as we expect. We were also saying last week when we looked at the SPX that where the Russell was in its sideways pattern and where the SPX was, we wouldn't be surprised if the SPX did try to make a minor breakout and then reverse and come back into range, which is exactly what happened. We're also, that was kind of confirmed with the Dow, because you can see the Dow came right up to its resistance area, and it briefly poked its head over there with a gap up on Friday morning, but other than that, it pretty much held tight. So that's another indication that the market was going to, reverse back into range here. So everything is more or less going as planned. The question is, where do we go from here? And if I'm just looking at the Russell chart, I'm thinking that we do hold this 1140 to 1145 area, and I'm still thinking that we're probably going to expire up here, closer to 1200. When we get the actual bounce off of this, when it finally bottoms out. And that would be my most likely scenario. I am a little bit concerned that things might break down, and again, that has to do with the SPX, where this particular asset, we're kind of in the middle of our channel. If this, a lot of times when we break out over a resistance area and then break back into it, we'll come down to the primary support, which is right here. What is this? 1835. That is a 30-point drop for the SPX. If that occurs, that will tend to pull the Russell down to around 1120. So we'll have to watch for that. And if we do break this 1140 area, we're probably dropping another 20 points to around 1120. Just kind of keep that in mind. Otherwise, now, the other charts, the NASDAQ and the Russell are looking a little bit more sideways and bearish, but the SPX and Dow are still very bullish. There's nothing bearish long-term about this move. We're still making higher highs, and so far we have a higher or at least an equal low. So there's nothing inherently bearish about that. That's still bullish. The Dow is still looking very bullish here. Again, we're just setting in a nice little ascending triangle pattern here, which is a bullish pattern. If we look at NASDAQ, the NASDAQ, on the other hand, is looking a little bit bearish. So we're getting some divergence in the indices, and that tends to keep us sideways, which is a good thing for us. So that's basically what we're thinking with the market. I think the Russell may drop a little bit more and then bounce, start heading up towards 1200 area again. And I'm kind of watching the SPX, the NASDAQ. If the NASDAQ breaks down to 3,500, that's probably not a big deal. Starts breaking out to 3,500, we're probably going down another 100 points. That's going to tend to pull the Russell down with it. So these are things that we'll have to watch going forward. But like I said, for now, continued sideways is my best guess. Also, note the average true range on the NASDAQ. It's up over 55 now. Average true range on the Russell has gone higher, up over 17. So you'd be more of a benefit keeping your positions a little bit wide to avoid getting chopped up, because that means basically an average day may be 18 points from high to low, and if your position can't handle that type of a move, it's going to drive you nuts trying to adjust it. So try to keep yourself a little bit wide there. And the SPX is elevated with its average true range, but this is nothing overly abnormal for the SPX. It's in the high range of normal. But you can see we saw this type of a range back here last year, and that's not terribly uncommon for the SPX. And the Dow average true range is, again, on the high side of normal, but not bad. The Russell and NASDAQ, though, are at fairly, I would say, moderately volatile levels. So just keep that in mind when you're trading. All right, so let's take a look at the trades. We'll start with the April trades. These got the most action this month because obviously last week, because the April trades tend to have higher gamma and a little bit more sensitive to price movement. The V condor, however, is so wide and close to expiration, and we're near the center, so there's really nothing to do here. There were no moves at all in the April V condor since March 27th when we pulled the straddle out, and this position currently looks like this. We can't even see the shorts on our chart hardly. So shorts way up here at 1241, and the other shorts are way back here at 1050. Very, very likely we're just going to expire this and let this go for a profit of 11. What is it? About 1753. Not a super month, but it's a profitable month for the. And we're having a lot of volatility, so no issues with that. And this looks like it should be a good trade. If we do pick up too much volatility, I'll just close it down. I don't want to take a big loss here, but the chances of that are pretty low. As far as the, let's see, let's go to the April ROCK trade. Here, if I come back to Monday morning, I'll show you this position. This got a little bit of action this week, but as of Monday morning at 10, we were in 1130 butterflies. We had two 1120 calls. Position was up about $1,000 or so. And here is what the position looked like. I'll answer that question in a second, Andrew. Here's what the position looked like. So everything's looking perfectly fine. The market obviously went up, a fairly large upside move earlier in the week. Now, if I was modifying the guidelines to what I thought, I probably would have left this thing alone and not done any adjustments to it and left it run up here, let the Greeks kind of get out of whack and wait and see, because I was thinking we're going all the way to 1200, not really a big deal. But since we're doing stuff by guidelines, I did adjust this when our Vega started becoming a problem. So if we look on, let's see, Monday was the 31st. The price went up, so we sold 10, 1130, 1140 put verticals to straighten this out. So if we come here to about the end of the day, you'll see that 10 of our 1130 puts were moved to 1140, and our theta is 100, our Vega is minus 47. We did lose some profit because we had a pretty good up move there, 22 points. And the position looks like this here. On Tuesday, we got a continued up move, and we continued with the adjusting. So we made somewhat of a major adjustment on Tuesday, where we came in here, and what I did when the market went up and I started having a Vega problem again, I sold one of the calls off because I had two of them, and then to correct my delta from selling the call off, I sold 5 1140, 1150 put verticals and 5 1140, 1160 put verticals to end up in a position. You see where the shorts are here? They're going to be moved to end up in a position where our shorts were up at 1150 and 1160. Position is still up a little bit of money. Our delta is minus 30, but you can see our theta and vega are looking good. And this is what we look like here. All right, so that, and the T+0 line should be fairly stable at this point. And this is what we look like at the end of Tuesday. I believe there were no moves until, well, actually, Monday, Tuesday, looks like I did something on, okay, I did 5 more vertical also on Wednesday. So if you come to Wednesday, these 1150s are probably going to be up at 1160. And they are, which gives me a pretty flat delta. Theta and vega numbers are okay, although vega is a little bit low here. And this is what the position looks like here. Now, this is definitely due for a roll-up, but you know, I don't mind sitting in this position. My Greeks are good. There's really not an issue here. So that's how that stood there. And coming into Friday, since we are getting closer to expiration, when the market came down hard, what did we lose? About not on. All right, we lost 11 points, 11, 12 points on Thursday, and there were no adjustments there. But Friday, we're down an additional 23 or so by the end, towards the end of the day, and I just started rolling back my 1130 puts to 1120, and that's just to widen the position coming into expiration. Like I said, I'm trying to widen the trades out a little bit so they're a little bit less sensitive to this price movement. This is what our position looked like at the end of Friday, which is great looking. We still have plenty of profit potential left in this, and if the market settles out being this close to expiration, the value will get up fairly quickly. So that had a lot of action last week, but of course we had quite a bit of price movement, and we are pushing in close to expiration. Now, as far as the M3 trade, actually, before we get into the M3 trade, let me, I'll go to Monday morning here. I got a couple of questions to answer. Okay, so question number 1, would I ever put a butterfly in the middle of a V-Condor near expiration to get a profit, bigger profit? Not according to the V-Condor guidelines, no. The V-Condor, if you're going to follow trade rules and you're not trading freestyle, then no, you wouldn't do that. If you're a freestyle trader and that's your rule set, then certainly. I mean, that's something that you could do. All right. It seems that most of the money is made in expiration week. Do you ever consider trading weeklies? Most of the money, you can make a lot of money during expiration week. That's true. You also carry a lot of risk during expiration week, so that kind of offsets that. And you know, one of the things that we've had in the market recently is we have not had a neutral market. The market's had, you know, even when it's been sideways, we've had very, very wide ranges of, you know, like 100 points, 50 plus to 100 points of sideways movement. So, the reality is you never know when the money's going to come into these trades. So a lot of times, like, you know, our bearish butterfly, for example, for April, made most of its money very far from expiration. Our bearish butterfly for May has most of its money is up. You know, I think it's going to be up almost 10% today, which is well before expiration. So you know, if we get sort of a sideways market like we've been getting, the money is there is money to be made far from expiration. When we get a market that constantly moves and doesn't settle anywhere, then, you know, sometimes we have to push them into expiration. I like to avoid that because the risk is so high. I don't want to be in expiration all the time. And, you know, do I trade weeklies? I mean, I don't. I coach and teach a lot of people that do trade weeklies. There's nothing wrong with them. They work for, you know, sometimes weeklies will work for, you know, 10, 12, 14, 20 weeks, and then they won't work for 5, 10, 15 weeks. So, you know, plus a lot of times we do go into expiration and we're into the last 2 weeks and we don't make any money the last 2 weeks. We're trading into expiration, but the position doesn't gain any value. So I guess my comment to that is you never know when the position's going to make money. I tend to personally trade further from expiration, and in some environments you'll get the money early, some environments you won't. We just happen to go through a long period of time where weeklies were decent to trade. And that's not that way forever. And because you're trading weeklies in general, if you're going to trade weeklies, you usually have to trade with a smaller amount of your account because you're at more risk of taking a loss bigger than you expect. So that's kind of my comments on weeklies. So they're great. A little harder to manage. You got to stay on top of them. I don't mind staying in front of the computer for 1 week every once in a while because I have to bring my trade into expiration, but I'm usually not up for being in front of the computer and having to watch the market every week. So I prefer to be further away. Okay, the April M3 on Monday looked like this. And this is an example too, right? Because we are realistically, still 18 days to expiration. I'm up $3,000. I'm not in my profit target. But I was talking to some students about this too. The M3 hasn't hit its profit target in quite a long time. Well, that's true. The market's been having crazy, crazy market moves for the last year and a half. So, whoops, this isn't the Dow. This the Russell has been having very, very large market moves in the last year and a half, and we're trading market neutral. It's like when you're trading market neutral in an extremely bullish market, you're trading a system that is outside of its best conditions. So when you it doesn't mean you're going to lose the trade necessarily, but if you're trading in a manner that does not fit the market conditions, then you're not going to be taking maximum profits. And the markets, like I said, been extremely bullish for the last year and a half. So that being the case, if you're pulling 5% out of your trades that usually has a profit target of 10%, you're doing pretty darn good. I mean, you have to keep that in mind. That would be good, even if you're making 2.5%, or even if you're making money at all, and essentially market conditions that completely don't fit your trade, then you're doing pretty well. So you got to keep that in mind. I mean, if you were a bullish trader, then the last year and a half has been fantastic for you. If you were a bearish trader, then the last year and a half has been terrible for you. The market conditions will change, and when they level out, as they're leveling out now, the market neutral trades will tend to start doing a lot better. These bullish people who are very bullish are going to start losing money or not making money and having very poor performance. And once the market turns and we start becoming bearish, and if we're extremely bearish, again, the neutral traders aren't going to be making a ton of money, but they'll probably be doing okay. Bearish traders will be doing fantastic. Bullish traders will be losing their shirts. So it's just regular market cycles, and you have to be aware of that. So, I mean, that happens. I mean, if you wanted to make money in a bullish market, trade bullishly. If you want to be completely market neutral, that's fine. You should still do okay, but you're not going to be making these full profit targets. You're just going to have to take what you can get because the market is not matched to your trading style. So anyway, so here's an example. That said, here's an example where we're up over 5%, and it'd be perfectly fine to take this trade-off. Again, given the market conditions and how the market is so bullish that I'm in this trade and I'm up over 5%, I'd probably be willing to take that a lot of the time and just kind of not worry about it. But again, here we are going to trade this trade out to its conclusion to see if we can actually make more money, because these are the sample trades, so we'll see how long we can stay in the market and manage our position. So here in the 31st, we did very similar things to the other one. On the 31st, we sold 5 1140, 1160 put spreads. On Tuesday, we sold 5 1150, 1170 put spreads. And by the end of Tuesday, this is how we looked. We moved the shorts up, and we were in a position that looks like this. So this is actually a very, very nice looking position. Of course, the movement did knock our profit and loss down a little bit because that was a fairly aggressive up move. And then by Friday, the market kicked back. And Friday, we ended up just rolling back some of the 1130, 1140 puts, doing the same thing. Just kind of, we took some puts from 1140 to 1130, doing the same thing. I'm just kind of widening out to widen my net here into expiration to see if we can widen this trade out a little bit. And we're sitting here, up about $1,800. So again, this trade looks perfectly fine, but the large movements last week are kind of taking its toll on us a little bit. Now, coming into expiration, as long as the moves aren't too wide, eventually our theta decay gets so high that it tends to offset our delta risk. And especially if we're a little bit wide and we don't have to constantly adjust this, we can make money relatively quickly. All right, so what else do we have for trades here? We got, so let's take a look at our May V Condor, which actually got no adjustments whatsoever. This is what this position looks like here. Let me just back this out a little bit. Had no adjustments, and it is up. No adjustments since it was put on. We've had nothing, done nothing. Position's up about $616, so everything is doing fine here. On the May Bearish Butterfly, we have essentially the same issue where nothing had to be done. We simply been sitting here. We're up about 10% on the trade. We're still 42 days to expiration. And here is what the position looks like. Absolutely perfect. If we stay in this range here, we may be able to make a decent profit with 1/3 of a position on. But like I said, I don't think so. I think we're going to be shooting back up to this 1200 area. So we'll see how that goes. Actually, yeah, 1200, then probably come back down. So if that's the case, we won't actually hit any add points, and this may be a very good month for this. And the May M3 did actually get an adjustment, and what I did is I ended up rolling the position back to 1140. I think I actually may have done something earlier in the week too. Yeah, okay. So early in the week, let's go to the first. This was initially, it started out the day and just a straight 1120 butterfly, and because the market went up, I wanted to control my Vega risk. Although this wasn't imperative to do, I could have sat on it for a day or two and not worried about it. Wouldn't have been a problem. But like I said, we're just following guidelines here. And I rolled my 1120, 1130 up to 1130 to control my Vega risk, which just barely brought it to neutral. Later in the week, or I'm sorry, yeah, on, I'm sorry here, let me see here. That's Tuesday. Okay, on Wednesday we did the a major adjustment. So on Wednesday, what we did is we rolled everything up essentially 20 points. So we started out with our 1120 butterfly and we rolled it up to 1140. So we went from this position here, which was creating a positive Vega situation and a positive delta situation. And in order to correct my delta or my Vega, I would have to roll up some shorts to correct that, and that would throw my delta very positive. So that's kind of an indication that you need to roll things up or at least get this long strike further up. And I could have done a spread adjustment and spread this out a little bit, but I didn't do that. What I did instead is I just rolled the whole butterfly up to 1140. And you can see that in this move here. So now we're at 1140 butterflies. This is what our T-log looks like here. And our position looked like this at the end of the day. Very nice looking M3 position. And of course we come to Friday and we pull all the way back to the 1150s and we're pretty much flat delta. Position's up a little bit of money. Theta's good, Vega's good. Here is what our position looks like as of this morning. So that is all we have for the positions. Everything's doing fine, and we'll see how the market does for us this week. All right, the question here, okay, are these weekly updates archived on my website? Yes, they're on my blog. So if you go in lockeinyoursuccess.com and click blog, and you can just kind of filter through everything, and everything is there. All the updates for probably since 2009. They're not all video archives. They were done with pictures and text for a long time. I've been doing video archives, I think, for the last year and a half or two. But they were all there, and you can get, you can see the trades, at least the Bearish Butterfly and the M3 for years. Can I repeat what I said about M21? I missed it. I didn't say anything about M21 today, so I'm not sure what information you are looking for on it. It is due to be out very soon. We're having a meeting today to hopefully get the launch date down. So next week or two, hoping that's coming out. Essentially, the M21 is going to show you how to analyze the market and do analysis on the market to determine where the market's most likely to go. If you, as you know, I've been doing this market update where I think the market's going to be for the week and where I think it's going to expire and the range it's going to hold. I show you exactly how to do that in the M21 program. And from there, the program custom designs trade plans to take advantage of that movement, to put you in a trade that is less likely to draw down, more likely to win, and more likely to win a lot more money. So that's pretty much what that system's all about. It's very comprehensive. It's a very large program. We have, it was done in a workshop format, and we have, the last day was a workshop with the people where we kind of designed trades and talked about designing them and traded through them. It was really a great program. So I'm excited about it, and I'm sure you will be too. So if there's no further questions, that is all I have for the week. And I'd like to thank everybody for attending, and have an awesome day. We'll talk next week. Bye, everyone.